Ladies and gentlemen, good day and welcome to the conference call of Samvardhana Motherson International Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. I now hand the conference over to Mr. V.C. Sehgal. Thank you, and over to you, sir.
Thank you. Ladies and gentlemen, good morning and thank you for joining us today, early morning. We are delighted to announce that SAMIl board has approved 100% acquisition of SAS Autosystemtechnik GmbH from Croatia. SAS is a leading global provider of cockpit module assembly, managing complex logistics with strong expertise in GIS solutions. This acquisition will further entrench and integrate Motherson in the supply chain and cement our tier 0.5 position and ability to closely serve our customers. This business has unique ability to serve new energy OEM, BEVs, NEVs, platforms. These OEMs predominantly focus towards technology and product development with outsourcing, manufacturing and assembly to trusted and competent suppliers. With continued EV trend, SAS is already generating 50% of its revenues from EV programs. The company gross revenue was 4.4 billion euros on principal basis and net revenues of euro 896 million for the year ended 31st December 2022. Further, the business has a strong order book of euro 1.3 billion cumulative net revenue over the next year. SAS has total 24 manufacturing facilities across 12 countries. Europe contributing 60%, America 31%, Asia 9%, and FTE a total of 5,000 people. SAS has core competency of complete cockpit module integration, which includes entire design and setup of the assembly line, routing of wiring harness, and whole host of testing and final supply assembled modules even from within the customer plant. The close proximity with the customers and complexity of the assembly operation may also create a natural ring fence for the business. We will be able to further scale the business in the next couple of years with insourcing potential for various products that Motherson manufactures. The enterprise value is euro 540 million to be funded by a mix of debt and internal accruals. We expect to close the transaction by the quarter second of the financial year 24, subject to customary closing conditions and receipt of regulatory approvals. This includes approvals from Works Council and antitrust approvals. Motherson always tries to be complete solution provided to our customer by providing new products and technologies. The acquisition of SAS is an important step forward in this direction. By adding these complementary capabilities, we will be able to further enhance our tier 0.5 position with the customers. With this transaction, Motherson will be a leading assembler of cockpit modules globally and gain from the increasing electrification trend and outsourcing of modules. With this, we conclude our overview and we are open for the question and answers. Thank you.
Thank you very much, sir. Thank you, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. An operator will take your name and announce your turn in the question queue. Participants are requested to use only handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Jay Kale from Elara Securities. Please go ahead.
Yeah, good morning. Thanks for taking my question and congratulations on this sizable acquisition. So my first question is regarding, SAS's financial position in terms of, it's a pretty impressive EBITDA margin and top line growth in the last couple of years as well. But if you just throw some light on their balance sheet in terms of their current debt position, how is the working capital, what kind of liabilities you will be taking up, as well as their plans of CapEx, since we understand that they are mainly exposed to the EV OEMs, which are expected to show decent growth going forward. So, and we in SAMIl are largely done with our growth CapEx. So some light on the direction of CapEx for this company as well.
Conrad, can you take the balance sheet question, please?
Hi, Jed. Look, as you know, we've bought the asset for 540 million, and all debt and debt-like items will be deducted from this before we make the payment for the equity value. The equity value will carry the debt in the form of lease liability for sure, as what we are aware about. It will carry elements like factoring and so on, and we have also structured it as a defined trade working capital that we require from the asset. Now, what the final calculations will be, obviously, will be done at a closing date level, which is likely in Q2 of the ensuing financial year. So that's how it is. The final payout will certainly be lower than 540 million, just given that it will carry some amount of debt. But the exactness of this will only come on basis of the closing balance sheet.
Thanks, Kunal. I'll take the CapEx question. I think the most important thing is you to understand is the main strategic asset. We're seeing a lot more movement towards.
I'm sorry to interrupt you, sir. Sir, your voice is breaking. Could you please use your handset to answer this question, sir?
I am using my handset. Can you hear me, or is it still breaking?
Yes, sir. This is much better. Please continue.
So, like I was saying, it's very strategic asset for the car makers. They are, on a trend of outsourcing more of these cockpit modules to suppliers like us. You have to understand that these cockpit modules have to be done very close to the car makers. It's mostly an assembly process. There is no huge capex that is there. On a steady basis, already all the capex that is required for the order book that we have announced is already in there. But a steady state capex is somewhere around 30 to 40 million, maybe 45 million in this business. Of course, if you win more modules and more orders, then more facilities will be required. And I think the good thing about this operation is that they have shown consistent growth. So we are optimistic with this asset. We think we will get a lot more opportunities. It is a profitable, very well profitable asset, and something that again comes with a lot of complexity. The assembly process to manage so many suppliers, to be able to produce just in time, just in sequence, just in line, is a very, very complex operation. So the skills and the know-how are very complex, and something that I think we will gain a lot and opportunities for us to grow with the customers with this business. But the capex is much lower than our traditional business.
Understood. So my next question is regarding, we've seen, this time around you've given this gross principal revenue basis, which is close to around 4 to 5 times of the revenues of SAS. Just trying to understand, historically also when you would have had these acquisitions, you would have had this opportunity of cross-selling, backward integration, etc., which is largely what you're indicating, maybe, as I understand correctly, on this gross principal revenue basis. How different is this time around versus the historical acquisitions? Any trend that you can say that is this a bigger opportunity for you since you have more products in your stable currently which you can cross-sell along with the integration of SAMIl as well? Any direction you can give on how significant is this backward integration opportunity for this?
Yeah, absolutely. I think you hit the nail on the head. For us, it's exactly that opportunity that is getting us very excited. Apart from a world-class team that is coming along with it, I think you have to understand that in the past, we were still, while SMP was doing the cockpit assembly business, it was a much smaller size, and only with very select customers. Here, now we have got a diverse range of customers and entry to be able to, again, use all the backward integration possibilities to be able to supply more and more products from our portfolio, and also look in the future, which are the products that are coming into the cockpits, and have a strategy for growth in them as well. So it's exactly that. We will obviously try to bring more and more products from our side. Obviously, that takes time. You have to wait for the new orders. It's more difficult to do that with the running orders. But in time, as we quote the new businesses from this, we will try to integrate more of our products and also look for opportunities of growth into products that we are not doing yet. So it's a very exciting possibility for us by taking this asset in.
Yeah, just one last question, if I may. This seems to be quite a good acquisition in terms of financials of the current company. If you can throw some light, what drove this acquisition? Was it led by the customer as always? Because the financial seems to be pretty healthy. How was it led and how was the thought process from your side as well as the client as well as Forisha itself, since it's quite a decently financially healthy company?
Look, I can't comment too much on Forvia. I think we have a very good relationship with them, with our customers. I think it was our customers' directive to move more into the assembly line. We see that business is growing with the car makers. Forvia, for their own reasons, wanted to divest this business. It was a great timing for us to really come in and to close this asset in a short period of time. We definitely have the customer support. We have spoken to our major customers, and I think again they see a positive trend in this business growing, and we welcomed Motherson to be able to move in this direction as well. So again, like my father was saying, we've always worked with our customers to find ways to improve our services, increase our products to them, and together working with them, we found a way to do that with this asset as well. And like I said, it's extremely strategic for us. It makes us the largest assembler of cockpit assemblies for our customers, and will enable us to do more products in the future. So it's very strategic, and we're very grateful for the team and to our customers for giving us this opportunity.
Great. Thanks, and all the best.
Thank you. The next question is from the line of Kapil Singh from Nomura Group. Please go ahead.
Good morning, sir, and congratulations on this acquisition. I just wanted to understand from a value creation perspective, where is it that you see maximum opportunity? Is it revenue growth? Is it margins? Or is it the new opportunities that will come along the way? And also, if you could share some color on what is the asset turn and ROCE of this business.
Kapil, you know Motherson well, so you know that we will look at all those things. Please understand that we've only had a limited access to the business for the closing so far. Till up to the closing, that's when we will get more deeper into the asset and prepare our plans. I think again from our side, definitely we will look at ways that we can improve margins, improve efficiencies, what we can support from the group. We've always tried to do that. And I think it's a great fit from what we can do from our modules and polymer division. So look, like I said, the business is a very interesting one. The growth of the business should be high. Of course, it would all depend what the final closing, etc. Everything comes out on, but we maintain our 40% growth targets for this asset. Obviously, no target comes starting there. We will have to prepare a plan that will get us there and pass us that. But Kunal can maybe add what numbers we're allowed to disclose to you as at closing. Kunal, could you?
Yeah. So a couple of things. Number one, I think you should be able to see growth here at both top line and bottom line level. The top line would also be driven mainly as we move some of the steps towards insourcing. The principal basis accounting will no longer be applicable to those, and hence those top line will be visible. Secondly, on the bottom line, we also expect a whole host of other forms of aspects that we could do on a module basis. For example, Forisha only does interior that is largely focused on interiors. We have the whole front-end module also that we can do. We can do it for commercial vehicles and so on and so forth. So those are additional pieces of growth that can be loaded onto the asset as well, and those are effectively what we find very exciting about this business. From an ROC perspective, I would suggest if you could just wait till we are able to have, total clarity on a closing balance sheet basis. Right now, whatever I give you will be an incorrect picture. By the time closing happens, the picture could look a little bit different depending upon how things play out. So best to really discuss this on closing.
Sure. Secondly, I just wanted to check on, revenue, gestation period from winning new orders and that flowing into revenue. So how long does it take? Because you are pretty close to that, 1 billion euro kind of revenue run rate per year. If I look at the order book is about 3 billion euro, right? And on margins also, which cost elements here are passed through as per contracts and which are not. So what are the risks to keep in mind?
Right. So, again, the 3 billion order book, just so it is clear, is not the order book, it's the booked business. The difference between the order book that we have typically spoken about are the ones which are not in production. This is the booked business, which is what is in production. And what the 3 billion tells you is effectively a line of sight available for these revenues to come into play over the next 3 years. So the actual order book or the actual book business is also for a longer duration, but we can only disclose what is disclosable by the seller. And hence, this is what we can say right now, that it is 3 billion over the next 3 years, and hence, on an average, at least 1 billion of net revenue should be visible over the next 3 years. Now, what are the risks? Look, the risks are the same as what the industry is. It has, again, a disproportionate share from the premium end of the vehicle. It has a disproportionate share on the EV side of it. So, as long as the industry performs around it, some of the customers we have spoken about in the presentation, as long as they perform, we don't see a risk. And with some of these facilities being still relatively newly set up to meet some of the increased demand from the customer space, I see the downside risk being fairly limited.
Okay, thanks. I'll come back in this.
Thank you. The next question is from the line of Kumar Rakesh from BNP Paribas. Please go ahead.
Hi, good morning. Thank you for taking my question. My first question was around the margin of SAS, which appears to be doing much better than SAMIL's own modules and polymer product business division. Now, my question was, how are they able to achieve that? Is it driven because of their capabilities in module assembly and logistics? And can it be transferred to our own businesses and hence expand margin of our own business?
Thank you very much for that. I think you're right. It is slightly different business in what we're doing in modules and polymers. Like I said, and you alluded to it as well, it's more assembly and logistics. So I think the clear attraction for us is that we are really welcoming a team that are experts in the assembly and logistics part of the entire business. And definitely, we do see capability that we can use some of our own module centers, etc., which are currently outsourced, to be able to bring that in and bring in much higher efficiencies and improve our own business as well. But that's been quite standard from us and all the acquisitions that we do. We try to bring in what's best in our fold to the incoming family member and learn from the family member where we can improve as well. So definitely, the team's job together with me is that in the next 6 months, till we close it, we understand all the strengths of the business and be able to prepare a plan that we can not only improve the businesses that are entering the fold, but also the group businesses as well. And like I said, I think they have very high capability in managing complex, suppliers that are coming to assemble the entire cockpit, assembly and logistics. And that's something that we definitely, the group will gain from.
Thanks, Vaman, for that. My second question was, if I do math, it's about 700 million euro of opportunity through backward integration using Motherson's existing product capabilities. Based on your interaction with customers and past experience, how much of it do you think can be converted where OEMs will agree to change their nominated vendors?
Look, that's any customer, as you must appreciate that we have those relationships as well. But I think the most important thing for the customer is being able to give them a complete solution at a competitive price. I think definitely if we are able to do that, we are able to win more business from the customers and be able to direct some of this business more to ourselves. But like I said, I think it will happen more over the new programs and the new models that are going to be quoted. It's going to be something that we will plan again as we take the company over and prepare a strategy of what we can bring really in-house. But this is the way OEMs are moving, more towards outsourcing of these modules, getting specialist suppliers to come in and do this. You understand the situation in Europe with high, inflation, commodity prices, etc. So they really are focusing on getting more and more suppliers to do the assembly and logistics for them. And that's a good opportunity for us. Definitely we have to be competitive and we have to be the best. And if we're able to do that, we will win business.
And I just wanted to highlight the opportunity is not only 700 million, which is only the set of products that we do currently. And we're really talking only about the larger verticals. As you know, we have a much diverse set of product portfolio that exists. Some of that would be lying in others. And then this is not the only set of products that we will do forever. So whatever that we do going ahead as well in terms of new product portfolio could potentially have a synergy with this asset. So in effect, the entire 3.5 billion is a potential.
Got it. My final question was around, in your understanding, what is the reason Faurecia has decided to sell this asset? I understand Faurecia, they are running about $1 billion of deleveraging program, and this possibly will help them in a long way to achieve that. But this business appears to be solid with strong margin and revenue visibility. So why pick this particular business to sell?
How can we comment on this thing? I mean, don't you think they are the best people to answer that?
Fair enough.
Hello?
Yeah, thanks.
You're asking us to speculate.
Thank you. The next question is from the line of Pramod Amte from InCred Capital. Please go ahead.
Yeah, hi. Thanks for the opportunity. Considering that there's a big difference between the gross revenue and net revenue, wanted to know how is the working capital, who will bear it, whether the current entity or the clients bear the large working capital?
Yeah, working capital will be borne by us for the entire principal set of the business as well. But given it is a principal flow, the net working capital requirement for the principal flow will not be much.
Will you be able to disclose number of days of sales?
Look, as I mentioned, we've targeted this with a certain degree of working capital coming along with the asset. And hence, if you're thinking from a cash flow perspective, for the current set, we do not expect, and given we already defined the working capital, we do not expect incremental cash flows to get embedded to meet working capital requirements.
And second,
with our past, we have, it's also a great potential of opportunity as well, because maybe we can improve as well some of those as we move ahead. And it could be a big delta just purely because of the sheer size of the principal set of the business.
And second question is with regard to again gross and net. How is the revenue recognition or when you give the order? What is the correlation between the gross revenue and the net revenue? Is there a way to understand that better?
No perfect way. The way the principle is defined is wherever the activity of that this asset is doing is procuring, embedding it into the product and selling it. The agent flow is driven by adding value to whatever that is being provided, whether be in the form of some processes that are done on it, whether be in the form of certification that has to be done on it. but there is an additional value that is provided on top of, whatever that is produced, or whatever that is procured, sorry.
Okay. Thanks a lot.
Thank you. The next question is from the line of Hitesh Goel from CLSA. Please go ahead.
Yes, sir. Thanks for taking my question and congratulations on a good acquisition. I just wanted to have two questions. First, on this revenue recognition in the P&L, you will report it on gross revenue basis or net revenue basis?
On our P&L, it will ultimately be net revenue basis.
Okay. And the program that you won of 3 billion euros, the OEM will have the orders that we have won on this SAS has 3 billion euros of orders. So I wanted to understand this product, the OEM parts which are passed through. This will be part of the contract, right? The additional order you won above 3 billion euros, then you can do backward integration. Is my understanding right?
So yeah, ballpark that would be right.
Yeah. Go ahead, Kunal.
No, ballpark that would be right. This portion of the business is already booked business.
And that is over 3-year period, right? So after that, whatever additional business now we win, we'll have negotiation with the OEMs to do backward integration, right?
That's the potential. And this, again, I'll just repeat, this 3 billion business is not the full booked business. This is what they disclose as visible revenue over the next 3 years on a cumulative basis. And hence, we are only talking about the disclosures that the sell side is able to provide on this. In reality, the book business will be larger than this, and so will the order book be larger than this.
Okay.
And from our definition perspective.
Great. Thank you, Kunal. My final question only is on the market size of this assembly business of cockpit, right? And what is the market share of SAS? Can you give us some sense on the industry size and SAS market share?
Kunal, to take that, I think we said that they have about 20% market share. And they are the leading largest independent assembler of cockpit vehicles. So 20% share. And again, that is only for cockpits. I think they're also doing possibilities of doing other modules, which in the future, again, once we take over the asset, we'll come back to you with a lot more of these numbers with more granularity.
And look, this is all that we are saying is in relation to what we have heard from them. It's not something that is, as you know, we do not track market share. It is not something that we really delve into.
Okay, great. Yeah, great, Kunal. Thank you. Thank you.
Thank you. The next question is from the line of Jinesh Gandhi from Motilal Oswal Financial Services. Please go ahead.
Hi. First, a couple of clarifications. Firstly, on the accounting which will be applicable for Motherson is will be accounting for revenues, including the revenues which we source from third-party vendors and net it up for what we buy in-house. Is that correct?
Sorry,
My question is, this 896 million euro of revenues, when it gets accounted in Motherson, it will be 896 plus what is being sourced from third-party suppliers, or it will be 896 only?
No, so it will be 896 in our books in all likelihood. To the extent that we are insourcing some of these principal streams of revenues, those will be on top of it.
Okay.
Right, so theoretically, if it insource 200 million, then it is 896 plus 200 million.
And currently, our supplies to SAS from SAMIl would be very, very negligible.
Almost.
There would be some portion that we do, but yeah, will not be much.
Got it. And lastly, with respect to this 896 million euros of revenue, can you talk about how much of that would be split between the actual manufacturing which we will be doing in-house versus more about the services revenue in that? Because the services revenue would be more or less with respect to managing the entire complex value chain which they do, whereas in-house manufacturing would be is that lesser number, and managing that entire complex value chain is the bigger number of the 896 million?
I think
I could hear only.
Yeah, just there's some didn't understand the question very well. Yeah, It's voice coming and then going. Sorry, could you repeat it again?
My bad. So this, of the 26 million euros of revenue, how much would be the manufacturing portion, in-house manufacturing portion, and how much would be the...
No, there is no manufacturing in this. There is no manufacturing in this. This is assembly, yeah. So if we have the order, we will supply. But this is a different business altogether. This is not the same business as what we are doing here. I mean, I'm getting a feeling that you haven't understood. This is integrator. We are on behalf of the customer. We are assembling the whole particular thing. We are managing all the supply chain, like radios or different parts of the cockpit and all that. They come in. We put that together. And depending upon what the order is, what the sequence is, it's a different business altogether.
Got it.
So I don't know why you're confusing it with SMP.
No. So there was, I wasn't clear on that and hence I answered this question. Thanks. That clarifies. Thank you.
Okay.
Thank you.
Kunal, I was right, you think?
That's all right. I couldn't hear the question either, so I was just clarifying.
Okay. Sorry, go ahead, please.
Thank you, sir. The next question is from the line of Chirag Shah from Nuvama. Please go ahead.
For the opportunity.
Yeah.
So two questions. The first question is that are there any platforms or models for SAS coming up for upgradation or renewal of contracts which would give you opportunity to go into more backward integration over the next 12 months? And that was one of the drivers for you to look at this acquisition. Because polymers, wiring harness, we all do in-house, and 20% opportunities that you have highlighted in the presentation. Is there anything coming up negotiation as the end of product life cycle is coming up nearby?
So the driver of this asset is not what is going to happen in the next 12 months. It's a strategic asset. If you can imagine, we will be extremely close to the customer. If you look at this asset, even in a 2020 when COVID was there, effectively you would see the performance of the asset did not dip as much, at least on a percentage margin level. So it just showcases how close it is to the customer as a tier 0.5 supplier to this. And thereby we come even more closer to it and opens more doors and opportunities to do more with them. So it's not for any short-term 12-month kind of insourcing related requirements for which we would have looked at this asset. It's still a complex logistic that has been managed for nearly 5 billion of inflows. And that's a pretty sizable, operation to look at it for a very, short-term trend. So it's a long-term strategic asset which will help us energize not only what is there in our existing portfolio, but everything new that we bring in as well.
Yeah, just to add to that, it's a running business. So as models, there are 24 locations, there are multiple customers. As models are running down, new models are coming up. There are launch of new models as well. So they are constantly, they have an ability to grow. As you can see, they've been historically growing with the customer. So definitely there is a lot of opportunity to quote for the new business. Again, we need to wait for the closing to be able to prepare a full strategy on which are the models that, we're going to go for, what insourcing we can have. So these are all the potentials that Kunal has talked about. And that's what's really exciting us, that, you're truly a tier 0.5 leading supplier to the car makers with access to all the assemblies of the car maker in the locations that we are, and future growth opportunities with other modules.
So let me rephrase the question. So this is a very interesting acquisition, and it's a great capability addition, moving closer to customer. But when I was looking at, based on historical data, the valuations, for example, they have something very similar to PKC, and the asset is also something similar to PKC as far as financials are concerned. Reasonably good assets. These are not like bankruptcy-related assets that you have bought. So I was wondering, one of the triggers would be that your EBITDA number, which is say 100 million euros, can suddenly shoot up simply because new models are coming for renewed bidding. and where you could do more insourcing or backward integration. Hence, that's a very near-term underlying opportunity to also exist apart from the long-term strategy that you have on this. So I was coming from that perspective.
Yeah, absolutely. I mean, it gives us the opportunity to do more, to bring in more insourcing, and definitely in the way Motherson, we will figure out a way to deliver a 40% growth in the medium to long term on this asset. So definitely we want to make sure that we have all those opportunities, and like you said, there is a lot of opportunities to bring stuff in house that should immediately improve the profitability of the company from where it is and bring group support. So that's why it's extremely exciting for us. It's extremely strategic for us and brings us even that much closer to our car makers, where we can give them a complete solution. But you'll have to be patient till we do the closing and come back to you with all of these more granular points once we have full control of the asset.
And just a clarification, Kunal. So you indicated that the working capital on this 4.4 billion revenue is a part of this 540 million EV that we have ascribed. Plus minus based on final adjustment, I understand, but let's assume 540 million for the discussion purpose. So that entire working capital on net basis is a part of this 540 million EV that you indicated, right?
That is right.
Yeah. So lastly, on this vehicle electronics, which you have indicated as a new growth areas, any more granular comment if you could have, how should we look at it? And any actionable that could happen say from next 12 to 24 months?
Look, yeah, you know our 2025 targets, so definitely we are on the lookout. If there are good opportunities, again, we will use the same stated formula that we have done in the past, the customer's behest, using financial discipline, going after good assets and good teams. And if there is a fit, then definitely we will come back to you and tell you. But again, I think the talk today is about this asset. It's a very successful close from our side. I think one key thing that you guys should look at is the concentration on EV, so you can see how much of the business book is actually focused on the new vehicles that are coming, and the customer support to get suppliers like us to be doing more and more assembly of these new EVs. It's a phenomenal growth area for us. It brings in a lot of exciting opportunities. And like I said, each one of those insourcing opportunities will come once we close and come back to you when we have a more definitive plan on it. But very, very exciting day for us. Like I said, very grateful to the customer for giving us this opportunity.
And EV is a combination of polymer modules and electronics all combined, right? Is there any specific carve-out where EV has a higher concentration versus ICE in this, in overall scheme of things, or is largely similar in nature?
This is a cockpit, yeah. It's not a wiring harness or... Oh, it's a cockpit. It's an assembly of cockpit.
Fair point. Thank you. Thank you very much and all the best.
Thank you.
Okay, thanks.
Thank you, sir. Ladies and gentlemen, as there are no further questions, I would now like to hand the conference over to Mr. V.C. Sehgal for closing comments. Over to you, sir.
Thank you very much. I would just advise all the people that this is a separate business altogether, and even if one of our companies or two of our companies are supplying, it's an additional job that we do with SAS. So it's value accretive in the sense that bring all the revenues and all that to the Motherson. More answers will be available when we go into a close due diligence and all that. So please have a little bit of patience with us because in a sense, Croatia is our competitor, so we didn't get so much of the thing, but I think we have enough to do in the next 3-4 months, and then maybe more color will be added as per your question. Thank you all very much. Have a great day. Thank you.
Thank you, sir. On behalf of Samvardhana Motherson International Limited, that concludes this conference call. Thank you for joining us, and you may now disconnect your lines.